After U.S. GDP shrank 0.7% in the first quarter, what's the current read on the state of the economy? I'm joined by Real Money Pro contributor Chris Versace. Chris, people are trying to get a read on the real tone of the economy following that read on first quarter GDP, especially as recent services data from the Commerce Department suggests the economy may not have been as weak as was reported. So what are you looking at?
Well, it's a great question, Brittany, particularly coming after that May employment report that surprised some folks. But I continue to look at some other data. We've had 5 consecutive months of month-over-month declines in industrial production. So I'm trying to look for other data out there to really hone in on what's actually happening, above and beyond the reported government statistics. And for me, when we want to get a beat on the industrial economy, things have to get places, parts have to get to where they're going. To me, that means zeroing in on truck and rail traffic.
So when taking truck and rail traffic into consideration, what is the data saying?
Well, Brittany, as you would expect, February and March was a little weak, but April, particularly for rail traffic, popped, but it fell significantly in May, and it's weakened even further in June. Taking a look at trucks, a little bit the opposite. April was a little spotty. May truck orders, however, fell off a cliff, down significantly both month over month and year over year. So to me, when I put all this together, weakening traffic, weakening demand for new equipment, it says that the economy is not firing on all cylinders, and we've already seen the snapback that we're going to get from the weak first quarter.
So what does all that mean for investors?
Well, obviously if truck and rail traffic are weak, you have to really rethink about owning those companies here, particularly the rails, Kansas City Southern, Norfolk Southern, for example, CSX and the like. But also, too, if traffic is weak, it means that there's going to be excess capacity utilization at those operators, meaning they're not going to need to order as much new equipment as we previously thought. That's going to weigh on companies like Trinity Industries, Greenbrier companies, and the same is true for trucks, which probably means PACCAR and Navistar.
All right, well, thank you so much, Real Money Pro contributor Chris Versace. And I'm Brittany Umar for The Street.